Every dollar you can save in taxes this year is a dollar you get to keep of your hard-earned income, and it changes your life.
You pay more to the government than what you're actually passionate about.
How many people do you know go to a yard sale or buy something on Facebook Marketplace and just say, I'll pay what you're asking? Why do you do that with your taxes? Don't. You shouldn't.
Time value money. This is what we always preach.
You should be mentally budgeting your taxes.
It's a great strategy.
What gets me is people just don't do this very often. That is how you utilize the tax code to make your life easier. Welcome to this episode of the Hidden Money Podcast. It's almost the end of the year. I mean, it is kind of the end of the year. We've got just a little bit length ahead of us until December 31st has gone. The bell rings, the apple drops, and 2026 is here. But you've got a few days left to potentially significantly impact your taxes. Now, to be honest, now is not the time to start tax planning. Hopefully, you've been working on tax strategies all year round, but there's still some things you can do. And Kevin and I are going to talk about the world of prepaid expenses, what that is, how you can utilize that to offset your expenses, how you can do that this week. But time is running out. So, Kevin, prepaids.
Prepaids. So what a prepaid, and we kind of have to start a little.
Yeah, let me be kind of honest. This is kind of like your oh crap bar, right? In the car. You've got a handle in your car that maybe you're teaching someone to drive, or your mother-in-law's driving, and there's a car coming up, and then you're not sure she sees it, and suddenly you grab for that bar, and it provides a little bit of peace. I mean, you're not going to save millions of dollars, although some big companies can, but you're not going to save a ton in taxes. But there's something you can do, and that's prepaid expenses, and you ought to be doing it. If you're not, you're just overpaying the taxes. So
yeah, and it is a timing thing, because if you think about it, you're going to prepay a bunch of things in December, but you're not going to have that corresponding expense next year, so you're going to have to prepay again that next December. So once you start it, it's hard to get off the train. But what a prepaid is, there's two bases of counting. There's cash basis, which the majority of us are on, and there's accrual basis. So on the cash basis of accounting, when you part as a business owner, when you part with cash, when you pay an expense, you get the deduction in the year that the cash leaves your wallet. The money leaves your bank account. That is when you recognize an expense. Yep. On the accrual basis, you're going to recognize it as it's earned, or income as it's earned, and then expenses as they're incurred. So prepaids look differently if you're accrual basis. It's a prepaid asset, really. But we're going to be talking on the cash basis side. As cash basis taxpayers, there are things that you can pay in December. Like, I know I'm going to incur expenses for my internet next year. I know I'm going to pay rent. I know I'm going to be paying cell phone bills, insurance. Now, there's different rules in these categories, and you can't prepay over a 12-month benefit. So if you have like a 3-year lease, for example, you can't pay all 3 years in December.
Not for rents.
Not for rents. You can't just say, I'm going to pay you 3 years, and that would be foolish anyway. But from a tax standpoint, you could pay up to 12 months of rent. So you could pay a year's worth of rent, and you're not going to have that corresponding rent expense, but you front-loaded a bunch of expense in December, and if this is a high year. So this is where the strategy comes in is, let's say my income is up this year.
Yeah.
But I know next year my business is going to take a hit, or I'm going to maybe be in retirement next year, or I'm going to just start toning down, or I know some things are going to be happening where my income goes down next year. Well, I'm going to front load a bunch of expenses in my high tax bracket year.
Yeah. Nearly every individual is on the cash basis taxpayer. And most companies, most small businesses are cash basis. So when you pay the cash is when you get the deduction. When the cash comes in is when you recognize the income. In a perfect world, you pay all your expenses that you're going to pay in January anyways, pay them that last week of December, and get your clients to pay you, or whoever's paying you, get them to pay you the first week of January, not over the Christmas holidays. I mean, it kind of works out that way already because payment systems get slower during Christmas season and et cetera, et cetera. So we just want to talk about some of the most common prepaids that you can do and you ought to do, especially if this is a high tax year. The one taxpayer this would not apply to is if you didn't have a high income this year in 2025, but you're expecting it in 2026, prepaid's probably not the avenue that you want to take right now. Kevin already mentioned a big one. You can prepay your rent all the way through the end of next year and pay it now and get a deduction for it if you're a cash basis taxpayer. If you would have to pay it anyways, you can't invent expenses, but if they're expenses you're already going to have to pay, you're allowed to pay that. Cell phone bill. I remember I started doing this 6 or 7 years ago, and I'm still doing it because income's gone up every year. I called AT&T, my cell phone provider. Can I prepay? Actually, my wife called. Can we prepay by 12 months? No, I'm sorry. We don't accept prepay payments. Well, we went ahead and paid anyways, a whole year's worth of expenses. And sure enough, credit card charge went through, and we just have a balance carry forward each and every month afterwards. You can prepay your internet, prepay any normal expense that you're going to be paying anyways.
Yeah, software fees are very common too. But there's some risks in this, though. One, you want to do it with a reliable vendor.
Yes.
Paying AT&T, probably a good bet that they're going to be in business next year. So the risk is, hey, I'm going to prepay, Joe Schmo over here for a year's worth of office cleaning.
Or your handyman.
Or my handyman, and then all of a sudden in February, he's skirted town or he's out of business, and then you can't get a hold of him, and you paid him for a year's worth of work, and you got nothing in return. So there is risk to it. So that's why I like to just look at my big reliable vendors. Who am I paying? Like our software fees. Now, our software fees are ridiculously crazy, and I never really want to prepay those just because they're so expensive.
But we know we're going to have to pay them again.
We're going to have to pay them again next year. So there's maybe some bargaining that you could do too, saying, hey, I'm going to pay you 12 months in advance. What can you do with this prepayment?
Yeah.
This is valuable to you. I'm giving you money up front. Can you work with me on the price? Maybe you could bargain with them.
Yeah.
So there's always options, not just on the tax side.
Same thing with landlords. If they're a smaller business or they're a huge multi-state business that has a bunch of properties, most of those people, the ones that are managing it, the ones that can make a decision to give you a discount, they're reporting their financials to someone else. And if they can get a big cash inflow in December, that might help their bonuses out. So it is definitely worth making the call. Hey, if I prepay a year, will you please lower my monthly rent or give me a discount, right?
Yeah. And just going back to the kind of the tax bracket game, you're going to have, if you're in a high income earning year and you front load those expenses, but then next year, let's say we're anticipating a low year, that worked out great. But what if your income goes up? Now you don't have the cell phone, maybe you prepaid $10,000, $20,000, $30,000 of expenses in December, and that was good in that year. But now your income's up next year, and now you're sitting on all these kind of bill credits, and you're not getting a corresponding expense. So you're but time value money. This is what we always preach. Not panic in that situation. That's good tax planning. You saved money today in taxes, and we're going to worry about next year and proactively plan against that year. Now, this is where kind of the hamster wheel comes in, is because now December is going to roll around again and your income's up. You're like, I'm going to prepay again. It's like you can't get off the train.
Yeah.
It's like when you're on this thing, unless you time it to where your income's low, then you kind of softly exit the train.
Or like when you have other tax strategies, like we just talked in last episode, the year I got the solar panel tax credits. That year, I actually got off the prepaid train because I had a big enough tax credit to handle it, and I didn't know what next year would be, so it didn't impact me. So when you're doing good tax strategies, you're going to have up years and down years. I mean, that should be part of your tax planning strategy anyways. Having these up and down years, doing different things, right? Like we do the Roth conversions on our way down years, and we do prepaids on our high income years where we don't have a lot of other strategies.
Yeah.
I want to talk about real estate taxes, property taxes, right? For a while, we quit doing the prepaids, even though they were the first ones that almost every CPA knew about. Like, I even think they taught us that in our college level tax class, right?
Tax 101, maybe 201, but yeah.
They taught us that and said, hey, people are cash basis taxpayers. You got property tax as an itemized deduction, but boom, 2017 came and we had a $10,000 limit on all state and local taxes. So we quit doing prepaids. Most people, our property taxes are generally due in January. But now this year, thanks to the One Big Beautiful Bill Act, we can deduct up to $40,000 state and local income tax, right? And in Texas, it's all property tax for us. We don't have income tax. It's a wonderful state. If you don't like paying your state income tax, come move to Texas. Bring your business with you, please. And call Revo Taxpayer.
Yes.
Yes. So this year, I mean, we already paid last January, right? 2025. We're going to have to pay January 2026 anyways. We should pay it this year because we can deduct both of those this year, get a bigger deduction, utilize our itemized deductions this year, prepay our charitable contributions as much as we can cash flow, right? We know what we're going to be giving to the church all next year. We assume we know, well, at least we have our normal tithe that we know what we're going to give. So prepay as much of that as you can anyways. And boom, now you got twice the itemized deductions this year. Next year, figure out a different strategy.
Yeah, that's technically called bunching. So if you ever do your own research, bunching is bunching multiple tax deductions, prepaying them in the same tax year, and doubling up. And this is really good for people. I'm glad you brought this example up because it's really cool for people. I just talked to somebody last week, like in the middle of last week, about this because they're like $5,000 over the itemized limit. So you have standard deduction, then you have your itemized. You get to pick the higher of the two. And this is for every 1040 client personal tax return out there. So you take the higher of the two. The standard deduction, probably around $25,000 if you're married. They were like at $27,000, almost $30,000, somewhere in that, in itemized. What does that mean? Yeah, they're itemizing, but they're only really getting that extra $5,000 of benefit, but they're spending $30,000.
Yeah.
They're spending $30,000, but they're only getting $5,000 of extra benefit because the standard is so high now.
Time out on that. I just want to point out as a little side note, that situation is very common because you know how Congress decides what the itemized deduction is when they're scoring what is this tax bill going to cost? They're discovering what is the normal itemized deduction anyways, and let's just come up with a standard deduction somewhere around that area so it's really not costing the government much more money because they were already getting the standard deduction that way. So that's actually really common. But then get back in.
Then so when we look at this, I'm like, hey, you're itemized at 30. What in your itemized deduction list, charity, like you mentioned, property tax. Property tax is going up. The SALT cap is going up to 40. So we're going to be bunching this year. They paid in January. So I was like, hey, we're going to prepay another $12,000 of property tax in December. We're going to start creeping into that SALT cap. Also, just looking at your sales and general sales tax. We haven't been looking at this since 2017 because everyone's hitting the 10K cap on property tax alone.
Yep.
But now you can start looking at general sales tax. In Texas, we pay 8.25% on everything I buy, clothing, car, whatever I'm buying.
Yep.
I'm paying 8%.
And this year I bought a new car, first time in 10 years. First time I ever bought a new car, but
8% sales tax.
Yes, 8.25.
8.25. So now you get a federal tax deduction if you don't hit your $40,000 SALT cap and your income's low. So it starts to phase out. This 40K SALT cap starts phasing out about 450K, somewhere around there, marrying, filing joint. So you tax plan, the lower you get your AGI, the more benefits are opened up. We want to preach this over and over because you're spending money on clothing, food, cars, whatever it is. You're spending that money. Bunch your property taxes. Let's maximize all of this. Set up a DAF, a donor advised fund. Let's bunch some charity. Let's get our itemized up this year. If you're floating across that standard line, in this client, what we're doing is instead of teetering 30K of itemized every year and only squeaking out a little bit more benefit from all that cash, we're going to front load a bunch and get like a $50,000 to $60,000 itemized one year. Then the next year we're going to take the standard, flip again to 60, 25, 60, 20, the standard will creep up, but that's the thought process is I'm gonna fold on itemizing every year because I'm gonna get so much more out of my money by bunching and utilizing my tax deductions wisely by using prepaids.
Yes, I couldn't say it any better. And what gets me is people just don't do this very often, and why? Like, again, I just don't understand. So maybe because they're not thinking tax planning or they're not budgeting, but most people at home budget, right? Even if they say they don't,
even mentally,
they're
somewhat.
mentally budgeting. You should be mentally budgeting your taxes. Every dollar you can save in taxes this year is a dollar you get to keep of your hard-earned income, and it changes your life. You add it up. You really, we preach into the choir here with you and me, but we're trying to get you, if this is your first time tuning in, that is how you utilize the tax code to make your life easier, to grow your financial freedom, saving every dollar of tax you can, time, value, and money.
Yeah. I'll give an example of a consult I had 2 weeks ago. You were out of town. It was actually an in-person consult. I was like, hey, I see a person face-to-face. We do business so much virtually. Yeah.
Of course, I'm out of town.
Yeah. But he's an elder at a church. And so giving to a church is very important to him. And when I was sitting down, I was like, man, you're giving a lot to the church. And I was like, but do you know what your biggest expense is? He's like, oh, my giving. I give 20% of my money away to the church every year. I'm like, taxes are your biggest. You pay more to the government than what you're actually passionate about. And he was just like, what? And I was like, yes, you're paying more to the government than your own passion and your job and what you want to be giving towards, something you believe in. You're giving a lot there. You're sacrificing, you're giving a lot of your income there. But look at this number on this other page. That's your total tax. I mean,
that's what you're paying the government that won't come to work for 40 days as
yes.
of the time of this recording. Yes.
It's for, and so it's like helping people see that, and how do we best maximize and get this tax strategy in place?
And there's always a way. Like, how many people do you know that go and buy a car and just say, hey, I'll pay sticker? How many people do you know go to a yard sale or buy something on Facebook Marketplace and just say, I'll pay what you're asking? Why do you do that with your taxes? Don't. You shouldn't. There's good reason you barter when you buy that car. There's good reason you barter on Facebook Marketplace. You can't barter with the IRS, but you can utilize the tax code that the IRS has to follow to lower your tax bill each and every year. And it's just like the time value of money. Consider that. Why do you start saving money and putting it in a retirement account early in life? Because $1 today can be $50 by the time you retire, or 20 or 15. $1 you save in taxes today can be 20 or 50 or whatever it's going to be when you retire. It makes a world of difference. You do both of them together.
Let those dollars cook.
Yes.
Put them in the oven, let them bake.
Amen.
And then they're going to come out a lot better. You know what my favorite prepaid is?
What's that?
Professional fees. We have so many clients that we work with. Now, this creates a tax problem for you and I.
Unless they send us the check like on December 29th, because it doesn't get to our office until January 1st.
Let's get into constructive
Yeah, we
receipt.
should do that.
But
the mailbox rule.
The actual strategy with paying your professional. So we prepare taxes and we prepare them on a flat fee. I can generally get in the ballpark within 10 to 20% of what your tax return is going to cost, your tax strategy. You can pay us in December. We'll invoice you for that year's work.
Yeah.
And
We're
then,
happy to.
And then let's say someone's buying a short-term rental, and this is where it's very common. They're doing all the work to get a cost segregation, do material participation. We want to inflate a loss as much as possible this year because of their material participation. So we're like, prepay us. You know, here's the fee, here's the cost seg cost, here's the tax return cost, here's the planning cost, here's everything it's going to cost to do the strategy. We invoice them in December. They get to put that on the next tax return that we're going to be filing in 2 months.
As long as they pay it before the end of the month.
Yep. And so that way they get, because if they paid us for our tax return on delivery in March or April, that's still a tax deduction. But they're not going to recognize that expense for another 12 months when we file the next tax year. So they get the expense in only a couple of months and see a benefit today, or not today, but in a couple months off an expense they're going to incur anyway.
Absolutely. But let's talk about constructive receipt before you, our clients, decide to prepay us. So we learned it, I think, in like the sophomore year of tax in college, called the mailbox rule, right? But it's basically the constructive receipt doctrine as well. When someone is a cash basis taxpayer and they receive income, they don't recognize income until they have it, until they have constructive receipt of it, until that check shows up in their mailbox and they can actually go deposit it. But the same thing goes for the person who paid the expense. You put a check in the mailbox and it's no longer yours, you're allowed to deduct that money then. So, and there's a lot of professionals you can prepay. Talk to the contractors you work with that are business-related deductions for you. Ask them if you can prepay them. They might have the concern, well, I don't want to pick up the income this year. So just send them the check on December 29th, if that doesn't fall on a weekend or Sunday. Make sure it's a day that postage actually goes out, but send it at the end of the year. You get the deduction. We'll pick it up in January when we cash the check. It's a
win-win.
It's win-win for everyone except the IRS, and that's the way it ought to be.
Yep. Don't prepay those fly-by-night tax preparers. This is something that you want to make sure the person you're paying to do your work in a few months is actually going to be there.
Yeah.
So it's a great strategy. We love it. Obviously, it helps, with our prepayments. It helps with our cash flow to get ready and ramped up for the tax season, and they get the expense, and it's a beautiful, beautiful partnership.
Of course, that's your favorite prepaid.
Cash flow.
I should have
Cash
known
is
that.
king, man.
I should have been
I
able
love
to
it.
guess that.
Yeah.
So, anyways, it is almost too late to do much except prepays this time of the year. I mean, there's still a few things you can do. There's still some oil and gas syndications that'll probably let you get in with them. We'll have our fund closed by then, but some others out there. If this is all that you've got and you are kicking yourself saying, man, I need to one day get serious about this tax strategy so I'm not overpaying the government, I'm not tipping them for not showing up to work or showing up and just doing the bare minimum, let this day be a reflection for you to think about. It's time to change this. There's only one person that can change your tax life, and that is you. So change it. Take advantage of it. Let next year be your best tax year ever. And on our next episode, we're going to talk about making that your New Year's resolution. Thank you for being here. Merry Christmas. Happy New Year. And we'll see you next week on Hidden Money when we're going to talk about your New Year's resolution. Until then, we'll see you.